Mullen Automotive is staring down the barrel of delisting. Again. And while we've been here before with MULN, this time feels different. The stock is trading around 22 cents. Its market cap has been sitting below Nasdaq's required $35 million threshold for over a month. And unless it can claw its way back above that line and hold it for 10 consecutive business days by August 25th, Mullen is gone from the Nasdaq. Let's be clear, the market has already spoken. A company that once had retail buzzing with promises of next-gen EVs and government contracts is now hanging on by a thread, propped up by hope and reverse stock splits. This isn't just a bad stretch of trading, this is structural rot. Nasdaq already gave Mullen its official notice back in February. It wasn't about the stock price this time, it was about market value, one of the last technical requirements MULN had left to cling to. Since then, the company's efforts to regain compliance have been limp at best. The June reverse split was another act of desperation. 1 for 100. A band-aid slapped on a bullet wound. The share price got a temporary boost post-split, but within days it slid back below $1. Now, we're flirting with the 20-cent zone again. And here's where things get really dire. Nasdaq rules say you can't just keep doing reverse splits endlessly to fix compliance issues. Mullen has already blown past the allowed cumulative split ratio. So that trick is off the table. So, what's left? Theoretically, Mullen could try to prop up its market cap through institutional equity funding. In other words, raise massive capital fast by issuing stock at a discount to institutions. But let's talk about that for a second. Who's buying? Who's actually going to bite on another tranche of MULN shares, knowing full well the company's cash burn is relentless, its revenues negligible, and its past financial disclosures questionable at best? Back in their most recent filings, they reported a net loss of $740 million and cash reserves of just $10 million. $10 million. That's fumes in EV terms. And it shows. Production has been sluggish, deliveries have been minimal, and nothing about their operational roadmap screams investor confidence. Even their much-hyped delivery vans and Bollinger Motor segment have failed to inspire any real bullish momentum. Sure, they might get some institution to fund another round, maybe a hedge fund looking to flip shares quickly or someone running a high-risk arbitrage play. But that doesn't solve the deeper problem. The brand has lost credibility. The retail army that once saw Mullen as a meme stock darling has mostly fled. And institutional buyers? They don't like dead ends. Let's imagine they do get funding. Enough to buy time. Maybe even enough to pump the stock back over the $35 million cap threshold. Then what? They'd have to hold it for 10 days straight. In this market? With this sentiment? That's like trying to keep a helium balloon weighted underwater. Delisting isn't just a technicality either. If Nasdaq boots MULN, it gets dumped onto the OTC markets. Liquidity dries up. Visibility drops. Institutional interest plummets. And for a company that's already struggling to secure funding and execute on even the basics of its business model, that could be the death blow. The worst part? There's no new narrative. No catalyst. No real innovation. Just recycled press releases, repeated partnerships, and promises that feel more like vaporware. Mullen used to be able to rely on hype. But hype doesn't last when the fundamentals don't deliver. And Mullen hasn't delivered. Not in revenue. Not in growth. Not in shareholder value. Look at the dilution. Shareholders have been wiped out repeatedly. Every new funding agreement seems to be paired with more shares hitting the market. It's financial quicksand. The more they try to get out, the deeper they sink. Now, I'm not saying there's zero chance of survival. If Mullen can pull a rabbit out of the hat, some massive government contract, a major delivery milestone, or even a white knight investor, maybe they buy time. But at this point, that's what it would be, borrowed time. The fundamentals haven't changed. The balance sheet is still bleeding. The stock price is still anemic. And investor trust is at an all-time low. That's not a setup for a comeback. That's a setup for delisting. So unless you're playing this stock as a pure gamble, hoping for a miracle pump, the writing's on the wall. Mullen's Nasdaq days are likely numbered. And anyone still holding needs to ask themselves, are you investing in a future, or are you clinging to a ghost?